Thank you very much. Thank you, Simon, for stealing a couple of minutes from me. So, good afternoon, everyone. Happy to see such a large audience. Wasn't expecting that. 3 years ago, embedded was the new thing, the new kid on the block. After the last 2 years, the spotlight was stolen by AI. But still, here we are, talking about embedded insurance. And I guess its potential is still strong as ever. My own journey, just a few words to that. I built it up on Insurtech in the field of embedded insurance, which we luckily sold last year to an insurer. They needed it urgently, so we were happy to do so. And despite of all the changes, despite of AI, I'm still very strong with embedded insurance. And I'm very sure that it will play a crucial role in the insurance industry. To dive deeper into that, I'm thrilled to be joined by an outstanding panel with very different views. There is an insurer, there's a tech company, a broker, and an MGA, each bringing unique insights to that field of embedded insurance. So just let's get started, and it's an honor to have you all here. Thank you very much. And would you mind introducing yourself? Would you like to start?
Yeah, sure. Hi, I'm Meri. I'm a CEO, founder of one of the leading embedded insurance Insurtechs on the European market, Insmo. And we are focused on delivering delightful insurance experiences to the rental market, everything related to rental homes and home contents. And yeah, thank you so much for having me.
Hi, everybody. So my name is Philippe Neufra. I'm the Chief Innovation Officer and Business Development Manager at Covéa Affinity. I think I'm the evil insurer of the panel today. Sorry for that in advance. So we're part of the Covéa group, Covéa being the largest P&C insurer in France. And I know embedded insurance is a buzzword, but we've been doing that since the early 80s.
Hi, I'm Arun Narayanan. I wear 2 hats. I'm the head of digital transformation for Marsh internationally. I'm also the COO for Marsh's Affinity business, which obviously deals a lot with in the embedded space. So that's me. Good to meet you all.
Hi, I'm Eran, founder and CEO of Ledgertech. We're a digital insurance technology company with a platform for embedded insurance.
Thank you very much. So we just start with the first question of mine, customer centricity, as our title is here. How do embedded insurance solutions enable greater personalization? And could you share some examples for that? How are customer data used to get coverage to the end clients? Eran, would you like to start?
Sure. So personalizing insurance to customers comes in several ways. I think the first one is to have a good product market fit, where embedded insurance is all about distribution channels. So creating the right insurance product for the right distribution channel. We work a lot with mobile operators and eSIM providers, which are looking to sell insurance products that will fit the customer profile. So embedded travel insurance is great, device protection, extended warranty, even cyber insurance. But if you try and sell motor insurance or home insurance, they would ask themselves, why would we want to do it? Why would we want to buy it from a mobile operator? So that's one thing. And the other one is all about customizing the product to the customer's needs. For example, we have customers who are selling health insurance through employee benefit platforms. And in this specific case, one size doesn't fit all. So if you're in your 20s or 30s, you might need a package that includes fertility treatments. But if you're in the 50s, that ship has sailed, so you wouldn't want to pay premium on stuff that you don't need, and we enable our customers to kind of customize the coverages that they need from the product based on a certain budget. So you actually let the customer customize what they need.
Thank you very much. Customization, distribution. Philip, how do you see that as an insurer?
Yeah. Well, I'm not a great believer in offering to the end customer multiple options. I think embedded insurance must remain very simple. The purchase process must be very quick, right? So we are talking about inexpensive products that are simple, easy to purchase. On the contrary, I think the main focus for us insurers is to offer a tailor-made insurance program to our clients. And when I say my clients, I mean distributing partners. So whether it is an OEM, a bank, whether it is a travel agency, and so on. And with respect to this topic, what we have to do as an insurer is properly understand the strategy of our clients. So to give you one example, for car manufacturers, what they want to do is sell more electric cars, and to achieve that, they have to convince the customers that to trust the reliability over time of the batteries, right? So here insurance does play a very significant role. What we are offering, and that accounts for new vehicles and used vehicles. So what we are offering, for instance, it will cover the any damages and breakdowns to the battery for a duration of up to 16 years, for instance. We're also offering a free diagnosis of the battery's state of health, offering specific assistance services covering the charging cables, charging stations, and so on.
Thank you very much for that insight. Aaron, you are the master of the large clients. So what's your view to that? Are you going into more customized solutions, or do you agree on very simple products in that field?
Depends on the product segment, and as you can imagine from our perspective, we genuinely have two customers, right? We have the large commercial client who we typically serve in a B2B capacity, and all embedded products become an extension of our value offering to those customers. So from their perspective, to Philippe's point, it's about bringing simple products to market that are easy for their network, their customers, their employees, etc., to buy without too much hassle, right? And obviously then tailoring those products that fit in a particular region, regulatory compliant, etc. But from an end customer standpoint, there is a demand for much more seamless experience, the ability to control the timing, of how long they want cover for, flexibility around payments, etc. So it's often a competing priorities in that the primary client wants to get these products out at pace, at scale across various markets, whereas we have to be very nuanced around what works from an end customer, the insured standpoint in that regards in different markets. So the level of variation or the level of customization we do see varying by product segment. So for example, in the automotive space, simpler. I think in the car insurance is simpler. But if you look at gig economy or other sort of product segments, there is a lot more personalization demanded with those product segments compared to maybe warranty kind of products for products or motor vehicles.
Thank you very much. Mary, are you as jealous as I for his large clients?
Yes, of course. But as an Insurtech, one of our strategies is, of course, to build the best user experience. And what we see with embedded insurance, then user experience usually is the key, whether the client is dropping off or not, and different demographics. And what we have, the data we have to bear in mind is that the different demographics have different tolerance for the user experience. And the younger demographics we're looking at, their only request seems to be that, do not make me think. If you are showing another button, another tick box, another something about this client is gone, you will never see them again. So, you know, this made us as a tech company to sort of navigate between, you know, what the insurance company needs as a minimum to underwrite an insurance policy versus what the customer needs. And sometimes you have to make really difficult trade-offs to provide really the best user experience and increase the conversion rates to secure or take out a policy.
As you are on the forefront on this kind of business, do you have a fine example for that? In your business, in your main business? Yeah.
So when we look at conversion rates, then we have partners who would like to adopt more steps when, you know, taking out insurance, so that the customer is not just sure, but they are sure if they want to have the insurance and so on and so forth. And there we are seeing conversion, let's say maybe 3 to 5% of all the checkouts in the basket. Versus we have other partners who sort of make it like so seamless, so transparent, like they say, hey, rent a device from us, here is also like insurance included, you can opt out, you can have it or not have it, and they have made it like so invisible inside the whole process that the customer is happy to check out for something that is a no-brainer, and there we are seeing like 60-70% of conversion rates. So I think these are very vocal numbers. And we have to really take this seriously, that the younger demographics, they don't want to engage with insurance. They just want to check out, they want to make sure that they are secured for the risk and that you don't make them think.
Thank you. So I get customization, I get easiness of the product. I heard user experience. And what was very impressive is the difference between 3% and 60%, just due to how the offer is done. Next question would be about these partnerships. Embedded insurance is usually done as a partnership. Lucky for us, or for my last company, insurers usually don't do it themselves, which has several reasons. What are the biggest challenges in those partnerships between MGAs, software platforms, and distribution partners, insurers? And what do you see as the biggest challenge in that? Would you start?
Sure. Well, in partnerships, it's a matter of approach. I think that embedded insurance is all about distribution. So at Ledgertech, we work initially with the distribution partners, so with the mobile operators, employee benefits, credit card companies, digital banks, etc. And we try to understand what sort of products will fit their customer requirements, and then we build it for them. And only then, once we have the distribution partner and the product, we go and look for a partner in the insurance industry, for a carrier. And normally it's a very, very short discussion with the business team, because they look at the distribution channel, they look at the potential. We ask them, would you like to jump? And normally the answer is how high, because it's a business decision. And the potential in this business is big. Prior to Ledgertech, I was CEO of a company that was selling static code analysis product, which was purely technical. So we worked with CIOs and CEOs and CTOs. And it's amazing to see how from a sales cycles of 12 to 18 months, suddenly we're down to 2-3 month stops, because it's a business decision. It's pretty obvious. The technology is an enabler. So that's I think, in our approach, the best way to partner.
Thank you very much. Philip, as I learned, decisions in insurances are not always the fastest, to say it very...
Really? Yeah? Not aware of that. Yeah, you're right. This is probably one of the reasons why we do not develop in-house technologies. Probably like many of our competitors. But you're right. I mean, embedded insurance is all about moving into an ecosystem of different players. When you look at the insurance programs that are active today, usually there are more than 3-4 different players involved, right? So I think there are two key moments in building up an ecosystem. It's when you choose the partner, picking up the right partner, and when you are in front of the client. And I think when picking up the right partner, of course, you will look at does he have the right claim handling capabilities? Does he have the right technology solutions and so on? But what is often underrated are, I think, two or three things. I think you have to make sure you share the same values, the same spirit. I think this is really important. Also ensure that you have the right level of transparency between both companies. And the third element would be make sure you agree on the value sharing before you go to the customer. And the last point would be when we are in front of the client, I do not like to blocking the way to the different partners. I like that everybody speaks in his area of expertise, so everybody is in front of the client. So I would not speak about technology. I would leave this to the player that he's expert on.
In my experience, I personally had never problems with the basic layer of trust. I'm coming from a large insurance company, so always had a good discussion with the insurers. They helped us with our embedded insurance solution. The only problem was that when we asked for a new product, it took quite a while. So how long does it take you to produce a new product?
This question to me, that's not fair. My answer, this was not in the script. My answer is way too long, definitely. I'm not happy with that. I think most of my competitors do struggle with the same problem.
Talk to me after.
Right. I think there is a lack of expertise sometimes. I think there is a huge risk averse. Most of the insurers are risk averse, and there is the thing with the regulation, which is changing, which is very harsh and so on, and that doesn't help definitely.
Thank you, Aaron. Sorry.
Yeah, I wanted to refer to that. Like, I think the biggest challenge that traditional insurance companies are facing is that the core platforms are very old. Normally 30 to 35 years old, written in COBOL, running on mainframe or I-series. Some of the platforms were developed before the internet was invented. All of them were developed before mobile came to our life and digital insurance emerged. And it takes them 12 to 18 months to come up with a new product, not even a digital one. And the issue is that about 7-8 years ago, they discovered digital. So they've developed separate platforms for digital customer journey, and they try to connect it to each other, and that doesn't really work well, especially in the embedded insurance space where you need to respond in days or weeks. And this is one of the things we are changing in this industry. So we see a lot of time. Sorry for stealing a bit more time. We're working with one of our customers, and they wanted us to create next insurance for them, which is basically digital small, medium business insurance. And they gave us 3 weeks to show them a POC. We apologize, it was in August, and people in Europe do have a tendency to take summer holiday, so we did it in 4.5 weeks. And they were amazed. They thought initially that we're cheating, that we did something using AI or whatever. They just couldn't grasp the fact that you can build a product in such a short period of time. And I think carriers now understand that this is the direction they need to go.
Thank you. I can agree on that. Aaron, as you represent a very large broker, are insurers a little bit afraid of you and produce the products faster?
I'm not sure that's the case, but we often end up with this sort of build versus buy kind of framework challenge, right? When we think about partnerships, there's strong pros and I think some risks as well, right? Obviously when you partner with a player who's already established in the market, we know typically they tend to move quickly from a technology standpoint, capability standpoint. We know they tend to understand the market well and the nuances around customer experience and regulation well. So there's definite pros that we see through partnerships, and we do partner quite a bit across our landscape. However, for a large organization like Marsh, for example, we are also very conscious of aspects around data protection, data security. So, we do understandably have very rigorous processes and onboarding protocols for any partner that we work with, because we don't want to take any risks, around our customer data. So that often ends up in situations where it takes months to onboard a new partner, let alone actually then configure a product on them.
So you don't mind if the insurer takes longer, because it takes you also quite long?
It does take us longer. And I think the other aspect we often wrestle with when we consider partnerships is, for an organization, large organizations like Marsh, there is often, if you extrapolate everything to a global scale, there's often a economical case for building ourselves, because because of our scale. The reality is, while the maths might work that way, sometimes speed to market takes priority, local nuances take priority. So I wouldn't say that build versus buy, build versus partner framework is fully settled in our minds, certainly within our organization. We do both, but we try and make those bets depending on the market and depending on the product we want to launch.
Thank you. Mary, what are your challenges with not only insurers, but also with your distribution partners?
Yeah, so with insurance companies, as we heard, they can be relatively slow, but there are a few tricks here, because I have learned it, unfortunately, the hard way. I've had products that we're launching in 3 weeks, and I've had products that we're launching in 18 months, where, I feel like if we don't get the product out right now, my startup is going to die, and die 3 times in 18 months. But I think the sort of like magic here, or the key here to have a faster go-to-market also with an insurance partner, is that first of all, you have to have a proper solid business case. If you have a weak case where, we are all taking a leap of faith to launch this new innovative product, nobody knows how it's going to perform, and so on and so forth. Like, of course, there's not so much incentive for an insurance company than maybe with a solid, auto insurance case. And the second thing here is that we have to do our homework. We have to do the calculations, set up the product, write down the terms and conditions, have all the partners in a row, and go with a full project, full package to the insurance company, so that we don't make them work too hard. We have done this work for them, and this is really speeding up things for us. When it comes now to embedded insurance partners and like distribution partners, then as you probably heard in the last panel, the most painful discussion is about commissions and whether these commissions add value to the customers at the end of the day. If we're having customer pay 100 euros for a product and 90 euros goes for commissions that provide questionable value, it's really hard to sell this product. And this is like always like lengthy back and forth with the partners. If they want to have 70% commission just to open up their distribution channel, what is the big value for the customer then, just by opening up this channel? So these are some very heavy and sometimes time-consuming discussions we've seen happening.
All right, thank you. You mentioned learning the hard way. We're now at a question which I had to learn the hard way: scalability. So what role, to your opinion, has technology in scalability? You are the last.
All right.
Philip.
Yeah, obviously technology is key. That's obvious for everybody. But the way we apprehend that from an insurance perspective, because as I said previously, we do not develop our own in-house technology solutions for the distribution, for the claim handling and so on. But what we did, we have invested over the last years a lot in the core system in order to handle the incoming data. So, as you know, we are kind of in the middle of an ecosystem, and we receive data from everywhere. And the challenge is when you receive hundreds of data files every day, is to use that data properly. In the end, of course, the objective is to, as an insurer, what we want to make sure is that we will get more premium than what we pay for claims. But not only that. So what we did is that we ensure that the data flow is secure, that the data we receive is compliant and does comply with the prerequisites. Also, what we want to do is to have this data in a data lake and be able to use it properly, have a dashboard, internal dashboard, to make sure the programs are profitable and so on, follow up, and then also use that data to send over a dashboard to our clients. So this is where really this is where we have invested.
All right. So thank you very much. Mary, how do you face scalability through technology?
Yeah, provided that we are also a tech company, so we have built up our own whole back office system for 8 years already, which is an end-to-end solution, and we do feel today that this is the key why we can scale on different markets, different product lines, and ensure exactly the same quality in user experience, in partner experience, in the quality and speed of claims and support and everything. So whatever we can succeed in one market, we can have the same quality in all the other markets. And I think this is also one of the key elements here. And the second thing, of course, is the whole data processing and better analyzation of data, building better products based on the amount of data that we can process through our own system. So I can only say that having sufficient amount of tech and also embedding emerging tech into your customer experience and your whole operations is extremely critical.
Thank you. Aaron, you apologize me mentioning that brokers are not famous for their tech suite. So how do you see scalability and tech?
Yeah, I think it's definitely a work in progress, on our side as well. I think when we look at tech and scalability across the different perspectives, so from a Marsh point of view, we want to get products to markets quickly. Once we know a product works, in a particular space, we are quickly thinking about where we can replicate that in other markets, other segments. So from that point of view, we've been working on our stack to enable us to configure products, replicate workflows quickly, right? At scale across different markets. From a carrier point of view, for our carrier partners and our primary client point of view, to Philippe's point, we are very conscious around being able to aggregate data and provide insights, both at a particular individual product level, but also at a portfolio level of similar products in different markets to our carrier partners and our primary clients to give them the insights they need to make better decisions. And ultimately, from an end-insured standpoint in a B2B2B, B2B2C scenario, we want to make sure that their experience is seamless, right? And that ultimately then leads to more acquisition and more scaling of these products. So we do try and attack this point from all the dimensions, but definitely a work in progress.
All right. So here's now the one who represents tech. So what's your opinion on
I was patiently waiting. So as an ex-IBM executive, I can tell you one thing. The mainframe, which most carriers are running, is very secure and very capable of handling a large volume of transactions. But, and it's a big but, being able to scale quickly and create products quickly, that's where the problem starts. So the way we tackled it is pretty much by building a cloud-based solution, which is scalable, secure, in terms of redundancy, in terms of flexibility, and there are two flavors to it. Some carriers are happy to work software as a service, where someone else like us could manage the platform for them, but a lot don't. A lot would prefer to have cloud on-prem, which is absolutely fine, and in this way you actually solve all the concerns that they have, because at the end of the day, It's their cloud. No one else can access it. No one else can access the data, even in theory. And this is how we tackle scalability and security.
Thank you. Thank you for the remark about the mainframe, which is, I think, very important. All right, so yeah, we come to an end. We heard today about what to do, what not to do, technical solutions. What's your opinion or your vision of the future of distribution in insurance? And what role will embedded play in that? Would you like to start? Yep.
Yeah, absolutely. I think, we see that only growing, right? So even if I look at our affinity book, the proportion of that book which is sold, through embedded products, we see that increasing year on year, and we only see that going up as we go forward. I still think there will certain segments will dominate. Maybe travel, consumer goods, electronics, automotive, and maybe some product and device kind of products. Those will dominate, I think. So I don't know if that will apply to the whole of the P&C space, as quickly as perhaps people might think. But certainly for these product segments, I think embedded will become the primary model fairly quickly.
Thank you. Yeah, I'm absolutely on your side. I guess you won't insure a refinery embedded.
Exactly.
Also in the future.
Might take some time.
All right. Eran, what's your view to the future of embedded?
I think the future of embedded lies around the future customers of embedded, which are kind of the younger generation who are looking to buy insurance where and when they need it. Not necessarily going to a broker, not necessarily going to the insurance company, but finding the insurance and insure certain things rather than the traditional insurance products that we are used to. So mobility insurance, for example, insuring a journey rather than having a motor insurance or car insurance, because a lot of them will not have cars. So the way we consume insurance is going to change, and we need to be flexible about that. And I think embedded is going to play a significant role. That's one side, because, yeah, you're right. There are products that you will never be able to sell as embedded. But a lot of them you'll be able to sell either digitally or partially digitally. And I see it with a lot of our carrier customers who are working with brokers or agents and will continue to work with agents in parallel to embedded insurance, but they're transferring a lot of the workload from their underwriting and claims departments to the agents, and they do it through digital channels. So actually they improve their bottom line, they provide better services, but at the same time they can manage the decision authorities for the agents, for the underwriters, who is allowed to give discounts, what sort of discounts, can we create a pool that a certain team at a certain region can spend over the next 2 weeks because they have a special offer, and so on and so on. For that you need a really flexible digital platform.
Thank you. Philip, how do you ensure those young guys, those people who don't have any insurance at all in the future?
I won't answer to that question. I will answer to another question, which is, I would like to be more specific about which business or which market will be growing in the future, because that hasn't been answered so far, if you allow me. I think motor insurance will be growing a lot. Today, motor insurance is being purchased directly from the customer to the insurer, with exception of the Nordics and the Italian market. I think I see a huge change here. The reason for that is that there has been a shift from car ownership to the purchase of a mobility solution, right? And we can see that in particular in France, there's this, over 60% of the cars now are being sold through leasing or subscription model. And this means customer, they are expecting the motor insurance being part of the value proposition. So we think that motor insurance will be moving from traditional insurance to embedded insurance, and that means a lot because it is a huge market.
Thank you. Mary, what's your view I hope a positive one to embedded insurance.
Yeah, I can also a little bit second to what Philip said. Have you heard the saying that by 2040 you own nothing and you will be happy? And this means that it will give ground to all sorts of models that are subscription, rental, and so on and so forth. So if we're subscribing for all the services, even if it's like vehicles or it's devices or it's whatever we're using, this also means that there's a need for protection, and the insurance will be embedded into those services even more than they are right now. So you basically don't opt into insurance, but insurance coverage is already there. You're getting a new phone, it's there. You're buying a plane ticket, it's there. You're not thinking about it, you just know it's there. And I think, this is possible only in two ways: when there is a sufficient amount of tech and data is being utilized efficiently, and second, if these kind of offerings are affordable, which means there cannot be any more 3, 4, 5 brokers in the middle, wanting a part of the commission for something they're providing. So I do believe that insurance offerings will be even more invisible in the future, and this is how the consumers expect to opt into insurance, by not dealing with insurance.
So thank you for this very positive outlook. I hope you enjoyed this lively event as I did. Please give a big hand to my great speakers. Thank you very much.
Thank you.